You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. Welcome to the show, David.
Hello, Jim.
A lot of people are in shell shock taking a look at what's happened to their portfolios over the past 5 or 6 years, especially if you're in precious metals. And you said, well, shell shock. Well, after an attack, it's time for the medics to do some triage. And you're saying you should do the same thing to some badly bleeding stocks.
I really believe that, Jim. And, of course, triage, by definition, is a term that's used, a medical term, where you've got some type of a catastrophe, an accident, or maybe a famine, or whatever it is. But you have people that you're trying to treat and save. And if you go out there indiscriminately, if you have large numbers of people that are in real distress, you end up just treating indiscriminately. Then you're going to be treating people that have little or no chance of survival, and others that maybe would survive if you treated them first may die. And so triage actually is a matter of prioritizing how you go about saving those who can be saved. And I think the analogy is directly appropriate for the mining stocks. Any of us who have held positions over the last few years and hung on to them are looking at some of the very best companies that are down substantially, sometimes 60, 70% or even more right now. And they're all kind of in the same basket. There are companies that are down 80, 90% that are good ones, and they're going to come back when the market inevitably turns higher. And there are others that you may have that aren't going to make it. They're maybe on their last legs, or they're going to just stay flatline. And so it helps to, if you have the courage to do this, and I've actually been doing this in the last few weeks, you go through and you look at the companies and you make an objective verification. Do you think this company is going to come back, and especially is it going to come back strongly? Over the last week or so, I've actually called a number of companies. I've been able to speak to several of the CEOs, and I've kind of talked to them about what's going on with their company and try to get a sense myself of just how likely they are to be able to either turn things around or how they're faring in this low-price silver environment where silver is trading below $18, whereas a year or so ago it was around 30, and so they're not making much money, or they're losing money now. But if you find the ones that you think are going to make it, and they're doing good things, they've cut the burn rate, they are looking at higher grades to use to stay profitable, they're just kind of hunkering down until things turn around, and those are the companies you want to hang on to. And so it's hard to do, but if you think about it this way, let's say you have two companies that are down 80 or even 90%. And one of those companies, in your estimation, is going to come back strongly and is going to be a survivor when prices turn to the upside. And the other one may be on its last legs, may not be around in 6 months, or it may simply flatline, and that's just about as bad as one that goes away because you're not going to get your money back. And so you think, I'll never get my money back if I've lost 80 or 90%. But if you take that money, that 10 or 20% of the money that you put into that company, and you sell it, and you put it into the company that you believe is going to be a strong performer, you can actually come back on top over time. And I did this in my own account in 2008, 2009 when we had that terrible sell-off. I did it as a matter of necessity. And in that case, the stocks came back much more quickly within 6 months. Many of the stocks that I had sold where I was down 80 or 90% had gone up by 5 to 10 times within 6 or 8 months. And it may take longer this time, but I think the same thing is going to happen. If you look at, and I could give you any number of stocks price points that I follow that were trading in 2011, just a few years ago, and this is with silver in the 30s, not even $50, and they were 8 or 10 times higher than they are now. There was a stock that I looked at that's trading for 86 cents this morning that was trading for $7.50 in 2011. And this company is going to open a new mine in another year. They've cut back production now, but they're husbanding their resources, and they're going to be around. They've signed a modified streaming agreement with one of the major streamers, and that's a company that I feel comfortable buying on any kind of a decline in here with money that I got from getting rid of a stock that I don't think is going to come back.
How are these miners surviving when the price of silver is below the cost of production?
Well, it's difficult. A few of them that have good cash flow are able to hold back some of that silver. One company, I spoke to the CEO yesterday, and I visited this property a few years ago in Mexico, and this guy just doesn't like to lose money. So when the price goes down, whether it's on the byproducts like zinc and lead, or whether it's silver itself, he just closes down the particular shaft that he's working on, or sometimes the mine, and they keep it dewatered, and they keep it in maintenance until prices go up again. Another thing that happens, and this has happened across the board, is exploration is going, the money that's being devoted to exploration is being cut way back by necessity, and that's going to have real implications down the line when prices revive and production is difficult to ramp up. This particular company, though, has 400 or 500 targets that they've identified and categorized, and with GPS locations and things like this. So they don't need to go out and do any exploration at all right now, because they know they've got so many targets that they could start with when prices go back. So they're just not spending money on those now, and they're making sure that they have the burn rate to be able to survive this. And that's the kind of company that I want to be an owner of and add more shares to if I already have it.
David, the Cambridge House investment conferences held in Toronto and Vancouver this year, sparsely attended by mining companies, their traditional bread and butter. Instead, we saw companies representing things like medical marijuana at these conferences. What's going on with Cambridge House?
Well, certainly the Cambridge House configuration has changed massively over even the last year or so. As you said, there are not that many miners being represented anymore. I understand that over 500,000 square feet of office space in Vancouver alone is available now that used to be occupied by different mining, exploration, and production companies. So it's really hit the whole sector very hard. And the thing is, this shakeout is in some ways it's almost unprecedented. But the companies that are left, they're going to be survivors, and those are the ones you want to hang on to. Primarily producers that have streaming agreements, but certain exploration companies that have really good targets. And there have been several major conferences that have actually been canceled this year. A couple in back on the East Coast and one in California. So it's hit the conference circuit pretty hard. There is one conference, and I can't tell you how many people will be attending this year, but I think a substantial number, and that's the Silver Summit in Spokane on October 23rd. And as we get closer, we'll mention this conference again, but that's the one that David Morgan he was one of the early exponents of that conference, getting it started and this type of a thing. And it's now run by the Cambridge House. But that's where the silver true believers show up every year from all over the world, literally. And there's usually a pretty large Canadian contingent that shows up as well there too. But that is really the place to go for all things silver. And I think we'll have a good attendance there this year as well too. And in fact, I actually have 2 articles that will be dispensed there in different publications. One will be in the Prospector News, talking about the mining footprint and its effect on silver prices. And also I'll have another one in Drill and Pick, which is the official publication of the Silver Summit, talking about silver from a technical perspective. So really happy to have those reports being published, and those people can pick those up free of charge at the summit. So we'll see how things go. I really do think that when silver turns around, it'll surprise a lot of people. And when it really gets underway, the people will have a hard time believing it's real until a lot of the profit potential is gone. So it's tough in here. Anybody who says it isn't, just is not being truthful. It's hard for me. But I believe that I have some pretty good company stocks that I in my own portfolio, and I believe in the silver story, that it's far from over. And we're gonna see great things from silver for people that have the courage and the stamina to hang on in here.
And speaking of publishing, David Morgan, yourself, and Chris Marchese have been working on this huge book on silver. When is that going to be coming out?
Yes, the Silver-Investor team has been working on this book, and it's been spearheaded by David Morgan. He's wanted to write a definitive silver story for a long time, in addition to the other writing he's done. So we're working on this, and we may have it available by the Silver Summit. We're not sure, but we're definitely closing in on getting it to the point where it would be published. And there'll be a lot of actionable advice in here, and a lot of discussion about the history of silver, not just where it's been in the past and where it is now, but where it may go in the future. So I think it'll be one that anyone who's interested in the silver story will want to get a hold of a copy of. And as we get closer to publication, we'll give more specifics about that.
Well, I live with a writer who's been published in several different ways, magazines, books, film products, and so on. And I'm telling you, it is a tough business. You have to be a dedicated person. And when you say, we're not really sure when it's going to come out, editing, rewriting, editing, you're never happy with the final product. You always think you can do better. A lot of us feel that way about what we do. But the thing is, it does have to come out at some point.
Right. And we're getting to that point. And of course, we want it to be the very best that we can put out. So we have high standards for ourselves because we know that the readers will judge us the same way. So it's been great talking with you about this today, Jim, and we'll revisit these topics again over the next few weeks.
Thanks a lot for chatting with us, David.
You bet, Jim. Take care.
My guest has been David Smith, Senior Analyst for the Morgan Report, which you can find online at silver-investor.com. You're listening to HowStreet.com radio. Find us on Twitter at TalkDigitalNet. Comments about the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.